Hello listeners, hello viewers, I guess hello clients as well. It is nice to be here, and well, first of all, I think it's a good idea for me to introduce a little bit of myself. My name is Gabriel. I work at H.F.A capital.net. We are an investing company group, and we also give some financial advice for business and also some financial advice in the market as well, on the investing market. Well, with no further ado, the only thing I will be doing on these videos and the whole channel, I guess, for now, probably have some more ideas for later on, but for now I will be just doing my trading journal, I guess. I think it's a good way of keeping track of your performance about your trading. And actually, for me, it's more important for the clients to see what I've been doing with their capital, which I think it's really important as well. If you're a client, you really should know where we are investing your money. So let me start by actually we're just gonna do some analysis here. I think that's the only thing that matters for me particularly, and the only thing I'm gonna do. And I'm not gonna dive into very much of account sizing, or I'm just gonna do what I think it's relevant for this video information. So recently I've come across this situation where I'm now in a trigger zone. That's what I call my supply and demand zones, and I decided to do this video based on the information that I had, so I can check it out later on and make some analysis out of it. So I've been studying the market now since 2016, been profitable in about 2.5 years now, and well, I think for my company, which have recently started to grow more, I'm very grateful for already the 10 people that we already have as clients. But I actually, who don't want to make their company bigger? Well, with that being said, I think it's a good way of sharing information, as well as give some idea of what I've been doing and verifying that later on. Well, as I was saying, we are on the EURGBP pair. Now we are on Forex, we are on the currency trading market, and we are looking at a trigger zone that I've been recently draw this last couple of weeks actually. And since that, I've been looking at the market now on the more for the flux compound than for the data analysis itself. And what I'm looking at right now is a trigger zone, which I am looking for shorted. But if something doesn't go right and we can actually manage to take it out of that, I'm gonna do 50%, which I think it's enough, and I'm gonna to do a target since all the way to our next area. That is the trade I'm looking for. This is the trade I'm looking for. This is for me, it's a good signal. Well, no, I mean not signal like any signal, forex signal, everything, that shit. Anyway, what I'm looking at is actually what I have been having this idea for the past week or so, and I'll be waiting for the price to get on this zone, or actually I'll be waiting for the price to get on this zone, which things will be way easier and the odds will be more to our side. But either way, I was looking at the data, and then I realized, well, this is probably a good opportunity to do the videos I was thinking about, and open up a channel. Perhaps it's good for me to keep track of what I've been doing right or what I've been doing wrong. That being said, it's easily to see that this is the idea that we are looking forward to check. It's a nice, actually 4.55 risk to reward ratio, and that's really good. 0.50% of loss against 2.27% or more, actually probably around 236, but just to be sure, I'll put 220 and leave it as it is, because 220, I'm pretty confident on that number. I don't think it's gonna go any lower than that. Perhaps it will, but I don't think so, and here's why. This is a major zone on the monthly chart. Actually, if you go to the weekly, we can see that the last time it touched around here was on March, I think, yeah, 7th of March 2022, so last year. And now we'll be looking for downtrend since the beginning of this year as well, and now we are looking at probably a short zone, which is pretty much the price gets overbought again, so the major companies can go there and just sell it as well. And that's just statistic analytic. Oh God, my English now is terrible. But anyway, that's just the statistic part, the analytics part. And now to further confirm that, or actually to better my odds, because I cannot confirm nor deny that the market will actually do this movement, I just can implement my odds of success. We'll be looking at the compound, and the compound of these both pairs, which I've been looking for in the past 2 years, actually since 2018. Actually, I've been looking at this data. And then it tells me that we are now looking for more a short area. We've been recently very high, down from the beginning of this year, and now we are looking for the short term again since the 10th, and now we're building these lower lows and lower highs. That's what I'm looking for. I'm looking for the next couple of weeks, so we can drop for around 100,000. 100,000, yeah, sir. 100,000 can be. It can be done. It's actually just very good at the moment for me, because the market have recently on the last 2 weeks, actually last 3 weeks ago, it has been since the end of September, we have the flux at 33,000, and we have pretty much an idea just looking by the heat map. Actually tells me that we are looking for a more bearish market, and that's actually can be confirmed because since the flux is gonna tell me that we've been looking for more short since these 91,797 shorts on flux. So if we actually take a look on that, on the area that we're looking for, it's actually the 20th of June of this year, 20th of June. So we can actually go back a little bit. I'm actually going just to change for the daily charts for the sake of it. And June, 20th of June, yeah, 20th of June, there we have been a more bearish market, and yes, can confirm that it has been. So we go back to the compound, 91,000, and then starts to go up back again to 60,980 back on 18th of July. Yes, 18th of July, just that, something around there. So it has been going up and down, and the compound is telling me just by the heat map that we probably will be looking more short. Market have been short around this area here as well, and so this is what makes the lower low and higher highs. So we have recently looked for a recent higher high, which actually lower high, sorry about that, as I get confused from time to time, but my mind is right. 33,991, and then we have 94,000, actually 9,470. So with the flux, I've been looking for more bearish market on this end right here. I'll be probably placing on the 3 of October. That was the idea. 3 of the October, yes, that's somewhere around here. 3 of October, I would probably be pushing the market down. But since it really got me up that much, I'll be now looking at this chart, and then I figure out something. Okay, if we're looking on the overall for a bearish market, we can actually hedge this position if something goes wrong, and that's exactly what I plan to do. This is why I do 60, or actually I'm gonna do 65%, because on the analysis, for me, it appears that this is the level where if something gets wrong, completely wrong, I will trade the opposite of it and then leave it as it is. With that being said, I think that's enough information. I think that's a lot of information. Actually, if you have any questions, just let me know. There are some things I can't share, but everything that I can share, I'll be happy to do so. For the flux, I think that's a good application of the flux, because we are now in a zone that's really important, not really important, but it's the zone that we've been looking at since the 19th of July. So if you go back to the flux and look at somewhere of the 19th of July, it's been the major higher zone. So with that being said, 60,998, and then we have shortage of the market for the upcoming weeks. That's what I'm looking for. This tells me that the next number of the flux will be somewhere around this 60,000. And for me, on the overall, since we have been looking for short more the market have been more shorter throughout since the beginning of the year, and that tells me that we're looking for a more bearish market. So if I only go to the euro side, it's taking a while to, yeah, oh sorry, I don't know what's going on. Oh, it's actually over here. Okay, so we actually, if it took I'm completely dumb, sorry about that. If we actually took on a euro side, which I think it's the one that controls more the market than the GBP, it's actually, the flux is somewhere around 42,000. Now it's down to 173,000, and we are up to 400,000, somewhere around there, 411,000, and then we are back to 173,000. So we're losing momentum on the euro market, and we also are losing momentum on the GBP part, which actually don't tells me everything, but it's a good opportunity, because we are on the flux, we are 31,000, and this is 173,000. So that's a big difference. That's why it tells me the one that makes him more moving, the one I should follow more, is the euro flux, which is this one. So I could actually just looked over here. Now that I realize I'm completely dumb, I'm truly sorry. And for the upcoming weeks, that's what I think it's going to do. So it's back up to an area that I think it's pretty great. It's a trigger area that's been the last up zone in the flux situation, and now we are back to this zone. Perhaps looking for short. Yes, probably it is. The odds are that we are looking more for short. If doesn't, we simply do a hedging position, and then we can look for somewhere around here. Somewhere around here. We can open up a hedging trade and then start looking for future possibilities of the market going up. If it doesn't work, we actually just simply go down. Either way, if we do the math, is 0.65. If we go up, if we hedge the market and go up, we can probably take a look on this position. If the market bounces here, we take the profit around here and then add to the sell, making us about what? I'll actually be looking to sell somewhere around here, and probably look up to short the market again around here, doing this also trade. So we have an exit plan. That's really good. And if you take on consideration that we are looking for two ways of what is going to happen on this trade, actually, it's either gonna go to my profit, and then we have plus 2.20% of the pair in profit, or we are looking for a hedge position that we're going to get 1.70% against 0.65, which is minus 0.65, which is 1.05% of profit either way. And then I can probably look back in the market later on and figure out if this is gonna be a very good position to trade, which is gonna give us plus around 2.14% to 2.15%, that maximizing us at plus 3.19% of profit. Well, that being said, I'm probably gonna go back on this trade later on the week, see what's going on in the market and see how things are going to be done. And well, I guess that's it. I can probably wait for this zone to short in a little bit more closer to the opening price, so I can minimize my loss. And well, I guess that's it. I guess that's the whole idea. That's the whole point. But for now, we are looking to short the market based on the flux, and that's what I usually base my trades on. If it doesn't go that well, you can always have a backup plan. With that being said, thank you very much for watching. I guess we are now at 16 minutes. Wow, that's a long video. Anyway, 16 minutes video. Sorry for all the inconvenience, if I had some around there, but thank you very much, and thank you for watching. So I'll see you up next time to check out what's going on with this trade.